Welcome back to our channel, where we dive into the world of investing and provide you with valuable insights. In this video, we'll be discussing stock market indices, what they are and how to track them. Whether you're a beginner investor or looking to expand your knowledge, understanding stock market indices is essential for navigating the financial markets. So let's get started. What are stock market indices? Stock market indices are measures of the overall performance of a specific group of stocks. They represent a basket of stocks from various sectors or geographic regions. These indices serve as benchmarks for evaluating the performance of the stock market as a whole or specific segments within it. Why are stock market indices important? Stock market indices play a vital role in providing investors with a snapshot of market trends and sentiment. They allow us to track the performance of specific industries, sectors, or the entire market. By monitoring indices, investors can gain insights into market movements, assess the performance of their portfolios, and make more informed investment decisions. Segment 3: Key Stock Market Indices. There are numerous stock market indices worldwide, but let's focus on some of the most widely recognized ones. S&P 500, the Standard & Poor's 500 index, represents the performance of 500 large-cap U.S. companies across various sectors. It is widely regarded as a barometer of the U.S. stock market. Dow Jones Industrial Average, often referred to as the Dow, this index tracks the performance of 30 major U.S. companies, primarily in the industrial sector. It is one of the oldest and most followed indices in the world. Nasdaq Composite. The Nasdaq Composite Index includes over 3,000 companies, primarily in the technology sector, listed on the Nasdaq Stock Exchange. It focuses on the performance of tech-heavy stocks. How stock market indices are calculated. Stock market indices are calculated using different methodologies, but most follow a market capitalization weighted or price weighted approach. In a market capitalization weighted index, companies with larger market values have a more significant impact on the index's performance. Conversely, price-weighted indices assign higher weightings to companies with higher stock prices. How to track stock market indices. There are various ways to track stock market indices, including financial news platforms. Many financial news websites and apps provide real-time updates on stock market indices, including current values, changes, and percentage movements. These platforms often offer additional analysis and insights. Trading platforms. If you have an online brokerage account, your trading platform likely offers access to live stock market indices data and customizable watch lists. This allows you to track specific indices of interest to you. Index funds and ETFs. Investing in index funds or exchange-traded funds, ETFs, that track specific indices allows you to participate in the performance of the overall market or specific sectors. These funds replicate the holdings and performance of the underlying index. Interpreting stock market index performance. When interpreting stock market index performance, it's essential to understand that positive or negative movements indicate the collective performance of the underlying stocks. Here are a few key points to consider. Percentage changes. A higher positive percentage indicates overall market gains, while a negative percentage suggests market declines. The magnitude of the percentage change can provide insights into the level of market volatility. Market sentiment. Significant index movements can reflect investor sentiment, economic indicators, or news events impacting the market. Understanding the factors influencing the market sentiment can help in interpreting stock market index performance. Positive news, such as strong economic indicators or corporate earnings reports, can drive index values higher, indicating market optimism. Conversely, negative news, geopolitical tensions, or economic downturns can lead to declines in index values, reflecting market pessimism. Comparison to your portfolio. Comparing your portfolio's performance against relevant stock market indices helps gauge how well you're doing relative to the broader market. If your portfolio consistently outperforms the index, it may indicate successful stock selection or portfolio management strategies. Benefits of tracking stock market indices. Tracking stock market indices offers several benefits to investors. Market insights. Indices provide insights into the overall market's performance, allowing investors to make informed decisions based on broader trends. By understanding the market's direction, investors can adjust their investment strategies accordingly. Portfolio monitoring. Monitoring relevant indices helps investors assess the performance of their portfolios. By comparing portfolio returns to index returns, investors can identify areas of strength and weakness within their holdings and make necessary adjustments. Risk assessment. Stock market indices provide a benchmark to assess the risk associated with different investment strategies. Investors can evaluate the risk-reward profile of their portfolios by comparing their performance against relevant indices. Diversification opportunities. Stock market indices cover a broad range of sectors and industries. Tracking indices can help investors identify sectors or industries that are outperforming or underperforming the broader market. This information can guide decisions on portfolio diversification and sector rotation. Limitations of stock market indices. While stock market indices provide valuable information, it's important to be aware of their limitations. Limited representation. Stock market indices may not represent the entire market. Some indices focus on specific sectors, regions, or market capitalizations, which may not reflect the overall market sentiment accurately. Weighting bias. Market capitalization weighted indices can be influenced heavily by a few large cap stocks. This means that the performance of these stocks can have a disproportionate impact on the overall index performance. Different index methodologies. Various indices may employ different methodologies for calculation and weighting. It's important to understand the specific methodology used by an index to accurately interpret its performance. In conclusion, stock market indices are valuable tools for investors to monitor and assess the performance of the stock market. They provide insights into market trends, help evaluate portfolio performance, and aid in making informed investment decisions. By tracking relevant indices, investors can stay informed, identify opportunities, and manage risks effectively. Thanks for watching. If you enjoyed this video, please like it and subscribe to our channel.